Yes team, how are y'all doing? Hope everyone's well. Welcome back to another episode of Sniper Sundays. This is episode 8 and this is a series where we go over all of the trades placed in the current week, going over the full analysis, whether it was a win, loss or break even, and keep a running total over how we're performing inside our VIP signals and analysis group. This isn't just an ordinary signals group where you get a load of numbers copied and pasted into the group where you're then just told to just replicate this trade, copy the numbers. This is an educational group where we show you the trades that we're placing, explain why we're placing them, show you all the analysis behind them, and be fully transparent in the actual practice of trading. So we're not hiding any losses, we're not shying away from losses, pretending that all we do is win. We're showing you everything in detail, including the analysis, so that you can learn to trade like us for yourself, completely self-sufficient. So let's kick it straight off. So in this week we had more losses than we would have liked, fewer TPs than we would have liked, but we still came out on top, as is true for proper trading. When you're using a proper risk to reward ratio of at least 3 or 4, you can lose quite a lot of trades and still come out on top in the end, okay? And you'll see that with the strategy that we use. Trading's not this loss-free space like these fake gurus out there will try to preach you about super high win rates, which is just a fallacy and some form of get-rich-quick scheme, which trading definitely isn't. So first of all, let's start the episode off. Our first trade of the week was a stop loss that we hit on pound US dollar. Let's go over that on screen here. So here was our trade. Well, I'll show you the trade. So I'm not just showing you the trade. I'm actually breaking down the trade for you so you can understand what went through our heads when we're placing this. So we kicked the day off. This was on Monday the 17th of Feb. So what we saw with the Asian range, okay, here was the high of Asia, which got taken out and swept to the downside. Because of this, we had a bias for shorts with a price target looking at this level, which is the Asian range low. So whenever we see the high of Asia get swept with a change of character below, we're usually looking for the low of Asia to get matched. So that gave us our bias for the day, for the London session. We had this sweep and then we had price change character. So what does that mean? It means that price was making higher highs and higher lows, just like that. And then here we had a lower high and this created the lower low. So this produced our change of character. Okay, so previously the character of price was pushing higher. With this we had a sweep of a key level and now price is showing a bearish character, moving lower, okay? What we saw was this 50 EMA that we love get used as resistance once, used as resistance twice. What we were looking for after that point was by using our Fibonacci retracement tool, okay? So when we plot this from the last significant high to the last significant low, we're looking for these key areas. Let me just consolidate this a bit more. So we're usually looking for these key levels to get hit, used as resistance again, and then trade to the downside. So our first trade on Monday looked like this. And here's how we called it out to the group. So we had this 1, 2, and then this looked like our third resistance here. So after this sell-off here, what we looked for is a retracement in price up to one of our key levels, trade it down to this extension level there, with stops just above that high, like that. This is our entry model that works about 50% of the time, and then the other 50% of the time it doesn't work. Let me just match that up to the actual level like that, and match the TP to the actual level like that. 50% of the time this works, 50% of the time it doesn't. This time, unfortunately, was one of the 50% of the times that it doesn't work. Now, let me explain to you why this is a very, very powerful strategy. If you're a beginner, you might think, well, 50% chance isn't really that good. But let me explain it to you like this. If you had a coin, a fair-sided coin with heads or tails, and somebody paid you £3.22 every time you got heads, but then you lost £1 every time you hit tails. Flip that coin 1,000,000 times and you'll be rich. Okay, let's take a sample size of 10. 5 times it lands on heads, 5 times it lands on tails. On average, over the long run, that's what's going to happen. Within any sample of 10 flips, it might not happen. You know, the distribution might be a lot different in the short term, but the law of averages in the long term does play out in your favour. So if you flip the coin 5 times and you lose a fiver, okay, that's fine. And then you flip the coin 5 times and you win 3.22 times 5, which is about £16. So you flip the coin 10 times, you've made £16, but you've lost a fiver. Overall, you've made £11 in every 10 flips. So scale that up, flip it 1,000 times, 10,000 times, 100,000 times, 1,000,000 times. You're going to be rich from that system. So most people would chop off an arm and a leg to have a model like this, and I'm giving it to you for free on YouTube because you found this video. So unfortunately this time we lost the trade, minus 1%. The reason we risk 1% per trade is because you can have a losing streak, okay? And you don't want to risk so much on any one given trade that's detrimental. So we only risk 1% of our whole purse so that you can safely trade it in that way, okay? That's a very well-respected technique in trading, to risk 1%. If you want to be a bit more aggressive, you can risk 2%, 3%. I wouldn't go any more than 5% per trade with a system like this, to be honest, because a 50% win rate is still 50-50 by definition. If you've got a system like some of our automated systems have, which are like 75, 85% win rates, you can go a bit more aggressive if you want to be more high return in the short term kind of trading. But with obviously risking more per trade, you have to accept higher downsides when those percentages do play out. And that's exactly how trading works. It's a probability game. So the way that I speak to you about trading, take it on board. It's not just my personality. This is the facts behind trading. It's a numbers game, probabilities, sort of like owning a casino, where you have to look at things in terms of law of averages for the long run, probability, and risk management of not putting the whole house on the line. Okay, so first trade, we hit minus 1%. Second trade then was on Euro USD, where we hit TP1 and TP2 and made 2.84% total when we won. So let's load up Euro USD and get rid of that one. Euro USD, and let me find which trade that we placed on this. So looking at the group, this was 10:55 on Monday again, so same day, start of the week, nearly 11, go to this, and this was on the 5-minute time frame like this. I can see here I'm using my 100 EMA instead of my 50 EMA, so let me load that one on there for you, just like that, and let me show you the trade. Okay, so first of all, we start off by analysing what happened with the Asian session. So I don't need to plot the high because price, when London started, broke the Asian low like that and then came back up. And our idea was that price is going to use these Asian lows as resistance and then push back off to the downside, okay? So we're seeing price making lower lows and lower highs. Price broke through the Asian lows, and our idea was that price was going to use these use these previous lows as the next lower high and push off to the downside. So how we got an entry from this, same again, take our fib, last previous high, last previous low, just like that, and we looked for our key levels like this, stops above the high, TP1 at this level and TP2 at this level like this. So if you check how that trade played out, okay, price came up, we got our entry, price came down, we hit TP1 at this level. So here I take 50% of my position and I close it out in profit, okay? So there you can see 2.38R, just like that. Closed out 50% of that, so we made about 1.2% profit, just like that. The trade then retraced a little bit, but eventually did stay in the position, and we did come all the way back down and hit our TP2 there, where we took the rest of the position out. So 3.27%, took half of that out in profit. Total, that adds up to 2.84% profit we made on that. Pretty simple. Okay, so we had the EMA as resistance again. We understood what the Asian range and price was trying to tell us coming into the London session. So yeah, this one did play out as part of one of the 50% winners, and we made money from this, just like I mentioned before. Nice and simple. Next one was a pound trade where we hit TP2. This is a swing trade, so this is a trade that we've been holding for a few weeks now. You'll have seen it on all the other Sniper Sundays. Go back a few Sniper Sundays and see the original trade that we caught, and this one we hit TP2. I'm going to show you that again just now, so I don't skip over anything, I don't hide anything. Let's find that for us right now. So this one is on the 4 hour. Let me get, I don't need my EMAs for this. So here, different strategy. This is my John Wick strategy. We've got this previous, let's go there. We've got this previous trend line like this, which tells us that price is making lower lows and lower highs like this on the 4 hour, and then that trend line broke. So once that trend line breaks, we call that a break of support. A break of structure like that. What happens then is we want to see some form of correction or some form of substructure. So here we saw lower low, lower high, lower low. Then price broke out above. Okay, so this is called an ABC correction if you follow Elliott wave principles. This ABC gives us this substructure there, which then broke out above. Okay, so that is a break of substructure, or BOSS for short. So there was this substructure which broke out again. So now that we have a break of structure and a break of substructure, this confirms our bullish bias from here. From there, what do? Plot our fib, last significant low, last significant high, up like that. And we wait for one of our key fib levels to get hit, which it did here at the 71. So we got our entry here, stops beneath the low, TPs. Now for swings I use a third TP, so we're still holding this trade. So our full trade is this, okay, all the way up here. We've already hit TP1, which was there. This week we hit TP2, okay. So it almost hit last week, but it didn't. It hit this week on Monday there, okay. So the trade that we closed out here was 25% of our position on this at about 3.27R. So we actually called it 3.25R. Pulled out a quarter of the position again in profit, which is plus 0.81%. So that was the pound US dollar swing trade that we hit this week. We're still holding the last 25% of the position to run up to our TP3. So we've already cashed out 75% of our profit on this trade. We've got the last 25% running to hit this final TP up there. And that'll be about a 4.4% trade in total. So next up is a Euro USD break even and a pound US dollar stop loss. Why have I got two trades on one line, you ask? It's because this was basically the same trade that we placed. So you'll have heard me say that we risk 1% per trade. That's not entirely true. There's more to the picture. We actually risk 1% per idea. So where you've got currencies like the euro and the pound, which are about 90 to 95% correlated on most occasions, it's basically like placing the same trade if it's the same idea. So if we would have risked 1% there and 1% there, we would have essentially been risking 2% on this trade, but we didn't. So what we said instead was put 0.5% on both. So what happened on the euro was it closed out break even. We didn't lose anything, we didn't make anything. And the pound, we lost 0.5% there. Okay, so let's go into the Euro USD first. So I'll load up my Euro USD like that. Clear that previous analysis from there. And then load it up for you. So This was on the 19th of Feb, okay? And this was on the 15-minute. So let's load this up. I'm aware that I just got up the, this was the Euro 15-minute one. Okay, so we'll go on the 15-minute. And what we had on this was 19th of Feb. G 19th, go to there. So I'll go on the 1 hour to tell you where this trade originated from. Okay, so pretty similar. We had this upwards trend like that, higher highs, higher lows. We broke out here, so now we call that a break of structure. This here, this double bottom or triple bottom there, that formed our substructure. Okay, the first bit of structure after a breakout, which then broke beneath. Okay, so this gave us a, do it from the candle bodies, this gave us a break of substructure, just like that. What we looked for is for price from this high to this low to come back up, react at this level, like this, stops above the high, TPs beneath the lows, like that. And we looked for this to break, retest, come back down. Now, on the 15-minute, after this reaction all the way up here, almost taking us out and then coming back down here, we actually decided to get out of the trade. So you can see there, price came all the way up there, almost stopped us out, but then came back to break even. We decided to close at BE, as you can see there. So this was a trade that we managed to save ourselves a loss from, and we just exited the trade for 0 and prevented a loss like that. So there was a trade that we used our smart risk management and got out scot-free without taking a loss. Now, I can't exactly say the same thing on the pound, so let's go over that and I'll show you exactly what I mean about these being highly correlated. So you'll notice here again, I'm on the pound, but it looks exactly the same, right? So we had higher highs and higher lows, just like that. Price broke out of that trend, so we got a break of structure. Now we had this A, B, C, like that. Just show you that again. So price broke beneath this, and then we had A, B, C, and then a break. So again, Elliott wave principles. This is a ABC correction, counter trend, broke again. So now that it broke again, that confirms our bias, break of substructure, and what we look for: previous high, previous low. Price came up. We sold off at one of these levels. Stops above the high, TP's down here. Unfortunately, this time we took a loss. Okay, so that's all factored in. So you notice how that is a mirror match to what we called on the euro. So if we would have put 1% on this and 1% on the euro, we would have basically been risking 2% on this idea compared to 1% on all the others, which is just not good risk management. So we put 0.5% on this and 0.5% on the euro. This one lost and we lost 0.5% there. Oh, just skip down all of that. Last trade was a Euro USD stop loss hit. Let's go over that one. So this was on Friday, I'm pretty sure. Let me find it for you. Here it was, a short on Friday the 21st at about 10:24. Let me check the time frame. 1 minute. So we're trading the 1 minute here on Friday. At about 10:30, like that. So get our Alt V. We want the EMA for this, like that. So this is a trade that we called on live. If you don't already know, I live stream my London session 5 days a week at the moment. So you can just literally hop in while I'm trading live, ask me any questions that you want. I'm here live, so I'm intraday trading anyway, so I thought I might as well just go live for you guys and show you what I'm doing. Since I'm doing it anyway, I might as well make content out of it, right? So here it is. I'm live 5 days a week, Monday through Friday, London session. So if you don't already, tune into those, see how we do it live in the flesh. A lot of the time it's just waiting, which is the reality of trading. It's not all guns blazing. Like a lot of beginners hop on the charts and just instantly try and force a trade, and that is how you lose. How you win, you don't chase the cat, you attract the cat, basically. So here on the 1 minute, same idea. We pop open our Asian session. What happened? You'll notice again, price broke beneath Asian session with a huge bearish drop like that. We came back up, retested the lows as resistance and started selling off. So from this sell-off, we were respecting this 100 EMA as resistance. Price didn't tap it every single time, but it doesn't need to. As long as it stays beneath it with wave structure, you can see that it's being used as resistance. It's sort of like a magnet. If you have a North Pole to a North Pole magnet, it's repelling. Think of it like that, okay? So what we were doing is we tried to catch each one of these highs to trade lower. We missed out a couple of trades because they didn't come up to our key fib levels, such as this one. So if we take this high to this low, price came nowhere near to our key levels. You don't just want to take a trade when it's down there, for example, because if you've got to have your stop above the high and you've got to have your TP like down here, for example, you're only making 1.1% when you win, okay? That's not what you want. So we only like to trade from fib levels up here, where you'd make like 3%, 4% when you win, okay? And that's a lot better way to trade. You don't want to trade every single impulsive wave that comes your way, okay? That's not the way to trade. So the trade that we actually placed, unfortunately we took a loss this time, but it happens. I do feel like I rushed this trade a little bit, and I probably shouldn't have entered, and I would have been. Well, you'll see how much I was up at the end of the week and how much more I could have been after this trade, basically. So what we were doing is we were looking to trade. I used this as a fib level this time, down here. Pretty sure it was that one. Something like that anyway. Might have been this one. Might have been that one, I think, actually, up here. One of them anyway. It lost, so it doesn't really matter. But anyway, the idea was lower lows, lower highs, keep trading this lower and lower and lower within our valid trading range. Price pulled back up. We got our entry somewhere like there. We had our stops above the high, somewhere like there. TP's down here. And it got straight and ran through when we hit stop loss. Absolutely fine. I can account for that and show you in the numbers. At the end of the week, we still made 1.15%. Okay, and then running total of Sniper Sundays, we're now up 19.35% on this episode since we started Sniper Sundays. So even with loss there, break even, loss there, I've still made money this week. So I'm telling you, strategies like this, which keep a 3 to 4 risk to reward ratio, it doesn't need to be wins all the fucking time. Your wins will outweigh your losses as long as you're using a correct strategy with proper risk management that has an edge on the markets. Okay, I show you this week in, week out. I take more losses than beginner traders are comfortable with. You need to push past that if you want to become a professional trader. Stop letting losses get to you and taking them personally. The market doesn't give a fuck, and neither should you. Work out your numbers, calculate the probabilities. Well, actually, you don't need to. Just learn from me. I've spent 8 fucking years doing this shit, okay? And now I'm here, week in, week out, showing you the results. Got third-party verified track records, FX Blue, my FX book, you name it, okay? I'm showing you a strategy that works and teaching it for you. There's a lot of value. I don't teach it all for free, okay? I give you a lot of value on YouTube, but I'm not an idiot. I'm not giving everything away for free. So if you do want to learn the full shebang, hop inside the VIP group. At the moment, it's £1 a day. Pretty cheap. It's a very cheap investment to make on your future, okay? So running total, Sniper Sundays, this week we only made 1.15%, but obviously on a 200k account, that's over $2,000. Easily done. $2,000 a week for just making 1%. Not too shabby. Running total Sniper Sundays are up 19.35%. So I'll end it here, short but sweet. If you want to hop inside the VIP group where I'll continue this video on and show you the weekly analysis for the trades that we're looking at for the coming week ahead. If you do want to join the VIP, just drop me a message. Super simple to join. We're upgrading to a Discord server pretty soon where we'll have extra rooms in there, such as stocks and shares callouts based on fundamental financial analysis from the likes of Benjamin Graham and Warren Buffett. So we'll have a room doing all of that analysis for you and calling them out in the groups, saying here's the intrinsic value of this stock and here's the actual share price right now. This one's undervalued by at least this much. There you go. Not financial advice, of course, just doing all the legwork for you guys and giving you the results and the analysis. We'll also have crypto callouts of similar logic where we'll say here's these projects, here's the reasons you might want to buy them, here they are, all the work's been done, laid it out for you. Basically like a signal, but in the stock market and crypto market as well. And then we'll have multiple traders showing you their strategies inside the group. So you'll notice in this video, it's not just one strategy, rinse and repeat. I've shown you multiple strategies on here. And we have a whole ensemblement of strategies for you to trade with. Which is the best way to trade as a professional trader? You don't want to just be a one-trick pony with only one strategy in the market. You want to trade your funds like they're a portfolio and diversify them across a whole bucket of strategies, essentially. So, hope you like the video. If you do find these educational and useful and highly valuable, which they are, drop a like and make sure to subscribe to my channel so that you don't miss the next ones. I'm going to try to do more tutorial videos rather than just Sniper Sundays, because I know if you click on my videos right now, it looks like all I do is Sniper Sundays, because it is. But I will be bringing out a lot more tutorials and a lot more just day in life, showing you what I'm up to, living my life as well, because I know a lot of people want to see that too. So yeah, thanks for making it this far. Hope you've enjoyed the video, and I'll see you on Mondays live in the morning. So take care, guys.